and we'll see. All right, so I wanted to go over a few things on the psychology of doing these trades. And this is something that we're going to be looking at in a lot more detail in the future. I'm still in the test phase of things to look at for it. Got another one joining in. One of the main things to do is to keep it mechanical as much as possible. So then you don't have to overthink the psychology of it. And Vandal, you're already good at that. But you do the 3x stops all the time, right?
It's either that or I'm just lazy.
Yeah, but sometimes lazy's good for these. Hey Matt, how are you? Good.
I'm well. Just got home from playing basketball.
There you go. Sounds good. Yeah, so Vanda, you just do you set the order in right after lunch when I place it, and then you just do the 3x stop and just let it be.
Yeah, I usually do the advanced order and I'll put the 3x stop, which is almost always 0.90. And then usually I'll put like a 0.05 as my
Uh-huh.
buy. But
Okay.
it doesn't get to it that often, but if something crazy were to happen, I'd buy it back for
Right.
0.05.
Well, let me go
So
over how to do an OCO order for anyone that will watch the recording. So on Thinkorswim, in the paper trade, I have a QQQ for next Friday. You want to highlight both options, buy it back, and then in advanced order, you can do OCO. That means one triggers the other. So what we could do is make it as a debit of say 3 or 5. Right now it's only $3. So I just wanted to leave it open to show how to actually do this. Then you can right click, create duplicate order. It's gonna be the exact same thing again. But then we're gonna do a stop order. By the way, the first one's a limit order. Because you want it to get down to that price, and then if it touches it, it'll get it. Stop order will be the higher one. So if I took in, say, $25 on it, I'd do 0.75. And I like just a stop market order, not stop limit, because if it goes stop limit, it might touch it and then blow past it and you don't get filled. So that's why I like a stop market order. Usually it's within a few dollars of that price, depending on the ticker symbol. Like if it's QQQ, it's probably gonna be within $1 or $2. If it's a low float stock, it might be a little bit more. But the reason why we like to do these things is once the trade is set, you pretty much just set it and forget it at that point. You know, it'll come up on your monitor tab. And if you have a lot of trades, you could do this on, monitor tab on all of them, and it could be a whole screen of working orders, right? But what's good about this is if you're essentially playing the percentages out on will it work or will it won't, and then over time and long enough time periods for long enough trades, it should be in a good result. If you look at 2022, we're at about 86, I think, percent win rate on it. So if you're getting about 86% or even just 8 out of 10 while you're stopping on the other two, then should be in good shape. Hey Raj, how are you?
Doing well. Just writing notes on a Sunday night. That's what
Yeah.
doctors do apparently.
Yeah. Yep, no notes. All right. Just going over
Good life.
some of the basics of psychology of investing.
Good stuff.
I'm gonna tie a lot of the things in the future into the what's that guy's name? Mark Douglas, Trading in the Zone book, which I highly recommend. I'm about halfway done with it now as well. And they give a lot of just once you do your research, let the trade go, don't overthink it, and don't go against your mechanics of the trade. But they have a lot of good tips on how to deal with different positions. All right. Another thing with the psychology of it, if you see like a recent support or recent resistance line, and it didn't get to that line yet, you just have to trust the process of your trade. So this is the QQQ in the last, I'll do 3 months or so. Had a pretty big run up, but now it's been leveling out between 300 and 313 or so. But if you might remember, beginning of the year, it was pretty low, 259. You can see that there's multiple touches, like right here around 290, and again at 290. So I might just add a drawing and add a little rectangle here. You also see some recent resistance here. If you're going for a little bit of a riskier trade, a higher delta, you could maybe go around the 295, 290 area. So another thing with the psychology is once you place the order, you could just let it be until it hits one of these gray bars. If it happens to hit the gray bar, then be mechanical on it and just stop out, especially if it goes through one of those support levels. That's really all I have so far with psychology of investing. There's a lot in the back burner that we'll talk about in the future. So I'm just gonna leave it up for questions now at this point. Pretty much live open Q&A here. If anyone has any specific questions or wants to look at positions and whatnot, feel free to let me know.
Looks like Raj asked a question.
I was on the chat.
Yep.
With the wheel, do we need to have a stop out? Original trading plan is just to take assignment. You don't need to necessarily have a stop out or not. You could decide to roll it down and out if you want. You could decide to just get out of the trade completely if you want. And it's pretty open-ended in terms of how you want to deal with your risk tolerance there. So a lot of the times if I'm doing a stock that I'm willing to wheel, I will let it go to once it hits like at the money. And then when it's at the money, I'll look at the option premiums to decide, am I going to just let it go and possibly take assignment, or do I want to roll it at that point? Pretty much the two best times to roll an option is right when it touches in the money or the day of expiration. So if you wait until the day of expiration, you'll get pretty much all the theta decay in the original trade. And then if it's pretty close to the strike price, you could possibly roll it down and out for a credit. If it touches in the money, you could almost always roll down and out for a credit because that current option still is very close. It's not really far in the money at that point. So sometimes to make the trade safer, let's say you're selling a cash secured put at 10, you might be able to roll down and out at say 9 or 8 another month, and then give yourself a little bit of time and also use less of your buying power. So I'm usually a little bit more on the fact of just letting it go and then selling covered calls. But if there's some type of news story that comes out where the stock looks like it's in pretty big trouble, you might want to just stop out or roll it down and out to make it safer. Any other general questions? Leaving it wide open here.
On our put credit spreads, like I guess Meta comes to mind. I think it's 75-70. If that were to have a huge drop overnight and it stayed at like 73, like worst case scenario, so you would get assigned. But I guess I've never been assigned anything. How does that work? Do you have to have the money to cover
You
it?
might get assigned, you might not. It's up to the option buyer if they want to actually exercise or not. So if you do say you're selling a 75 put, buying the 70 put, and it goes to 73, it is in the money on your 75 put. However, there's still time left in the trade, so it still has some value in the actual option. The main times it possibly would get assigned is if they're trying to capture a dividend and the dividend happens to be higher than what the option value is worth, but that's relatively rare. If it does get assigned, depends on your brokerage. Some brokerages will automatically sell the 100 shares right away.
How about Thinkorswim?
I think Thinkorswim does, but I'm not 100% sure because I've never had it happen before.
Yeah.
That's why I like to get out way before that happens. You know, the alert prices.
Oh yeah, it's always worrisome. Even like after hours has been so crazy that I don't know what Meta is at now. I think it's up their ways, but you know, you're always worried because it just went up 20% overnight. And I understand there's earnings and everything. But I'm like, man, if that were to drop like another 10% overnight, now it's, you know,
What stock are you talking about?
Meta.
Oh, Meta, okay. Yeah, I mean, it's still pretty far out of the money in the end, because remember I sold that put pretty much at this level right here before the gap up.
Yeah.
And that was earnings right after. There's no earnings until it expires.
And I think what's it at now? I can't see.
172.88. And I think we sold the 150 or 155. I'll double check. I'm on the paper trade right
I don't
now.
know why that doesn't seem right.
Yeah, I think it's 155, 150.
Yeah. So let's look at what the delta is on it. 155. Yeah, 0.15 delta. It's starting to get a little bit challenged, but it's not out of the realm of possibility that it would get.
Yeah.
I'm down $26 on that particular.
Yeah,
trade.
yeah. And it's not. It's just. It seems like it's pretty volatile sometimes. So
Right.
I'm looking where it's out. I mean, if it drops during the day, it's not a big deal because your stop gets hit. But if it drops at 4 in the morning, then
Well, sure, yeah. 172.88 minus 155. That still has to drop another 17 points, which is almost 10%.
yeah,
So you essentially subtract the current price to your sold option price, then divide by the current price. Yeah, it's about 10% more of a drop. Which, I mean, theoretically, it could drop 10% in a day, but it's pretty rare, especially with no earnings.
yeah.
The odds of it happening are very minuscule. You'll be able to stop out earlier than that in pretty much every case.
But so if you ever were to get assigned, it's a situation where they'll usually sell your shares right away. It's not like
I would sell them right
broker
away
to
just to
cover
get
it
out of
and
it.
then share it.
Yeah, because you're gonna need $15,000 to
Yeah.
hold 100 shares of it. And then your brokerage is probably noticing you don't have that in buying power. So it might just sell the shares. Like, obviously you could still sell the shares at a loss. But then, that is
But
what
it's
it
not
is, I
tax
guess.
drop.
What was that?
Like margin doesn't come into play or anything on that.
Not if you sell the shares immediately, because when you have a margin call, you still have a bit of time to actually deal with the margin.
Yeah.
So if you deal with the margin call by, selling all of 100 shares, then you would be okay at that point, especially if you had some buying power. I mean, the worst case scenario is, yeah, it goes to like 150 or so overnight gap. You get early exercise in the middle. I guess. I don't think you can get early exercise in the middle of the night. I know you can get early exercise on expiration day though, because the market closed at 4, but options go another 15-30 minutes, I think.
Yeah.
I know there's a crazy case with Tesla where that happens. And then someone had to hold it over the weekend and it dropped a ton. They lost a huge amount of money. But again, that's really rare. Another way you could go about it is set an alert at the delta. So if you right click on the delta here.
I didn't even know you could do that.
Yeah, so right click on the create alert here of the delta part. And you can set your delta where it'll alert you. So
Oh, that's
negative
pretty.
maybe. Excuse me. The teacher voice every time I talk too much. So yeah, I just set an alert at 0.3 delta on it. Negative 0.3. Excuse me. So you could do that with the alert, or you could just set an alert price. I just like to set the alert prices, typically 3 to 5% above the sold. You mark at or below. I have it on my regular brokers. I forgot what the strike was for the alert. I think we alerted at 163.
Yeah, something like that.
Which is still a few percent. It's about 5%.
I know. I think I've asked you this before, and I don't want. If other people have questions, jump in. But how well does this work in a normal, like when the market's good?
Like last month.
Yeah, yeah. Well, it worked really well, but the VIX was still somewhat elevated. Talking if the VIX goes
Hmm.
down to like 10, 11, 9.
Okay. Yeah, the premiums will be lower. You should probably expect lower returns in general. But you don't want to over leverage and over allocate when the VIX is super low, because if the VIX expands really high, then it could really hurt. Because then those option premiums are worth more. Yeah,
But
the
you
VIX
would,
is really low, like 10. I probably wouldn't bother with 0 DTE, to be honest. I think there was one point in the beginning of last year where the VIX was relatively low.
how about the put
And then I
credit spread?
told members to like expect a slightly lower returns while the VIX is low.
How about those credit spreads? Do you buy closer to the money because the VIX is
You would
lower?
have to. You would
Yeah,
probably have to go a little closer to the money to make it worth it. Like, I mean, you could do a 5 with credit spread, but if you're only gonna take 10, 12 bucks on it, it's probably not worth it.
yeah.
Especially for the risks that you might have. So, yeah, I mean, I would take minimum $20. I usually try to get at least $25 on these. Which ends up being around 0.08, 0.1 delta or so. In most cases where there's no earnings, you'll get that $25 on it. I mean, it
Were
happens
you-
almost every time I look, when I have a watch list of about 100 stocks or so, and then when I'm going through each one, I'll go to like the 0.1 delta and go 5 with, that's $42. And then some of the safer ones, like, I don't remember Procter Gambling's earnings or not, but let's assume it didn't. 130, 125, see it pays 22 to 27. You might get 25 out of it. So it really depends. And then I use good old google.com. Type in if something has earnings or not. There might be a quicker way to do it, but I just literally Google it. Yeah, there's no earnings until April. Any other general questions?
Yeah, I have a question. When do you like your QQQ credit spread on the call side?
Yeah.
When do you typically come to the realization of putting that on, like when QQQ either breaks resistance or a certain delta, or just the market's going to take kind of a downturn, or to hedge it? Because I know you mentioned you don't usually do that, right?
I usually don't do it much at all, and I pretty much would only do it with ETFs and not individual stocks. I know beginning of last year, around the exact same time, we were testing out quite a bit of iron condors to set the call side. It really didn't
Okay.
help because the market
Okay.
still dropped so much. If anything, it kept you in the trade longer, and the call side wasn't really giving too much of a premium, but it kept you in the trade longer, and then the market kept
Okay.
dropping, and you still stopped out anyway.
Okay.
So in a way, you're actually might be more risky that way because you're now stop losses are higher. Because if you're taking in money on the call side, you should probably change the 3x stop to whatever the total premium was on the puts and the calls.
Okay.
But yeah, there's nothing necessarily wrong with doing iron condors. I'm in general long-term bullish in the market. That's why I almost always go to put credit spreads.
Sure, that makes it hard to have. Yeah. Okay.
Unless it's like relatively obvious that everything is tanking, then we'll probably do some call credit spreads at that point. But the
Okay.
market isn't necessarily showing its complete tanking yet. And QQQ is still above this point here. And it's still above this gap that it went up. So I mean it's relatively sideways. It looks a little bit downward, but not a ton. 313 to 300 is not a huge drop.
Okay.
If you had like a 10% drop in a month, maybe then at that point you'd probably go call sides on.
Okay. Thank you for clarifying that.
It's a little bit of intuition, to be honest, on that one.
Sure. Yeah.
Like I
that
left
makes
the
sense.
IWM as just a put credit spread, and I was considering making that one an iron condor too. I think we recently did an IWM one, but I decided against it. It's because I don't want to make it too complicated in general.
Okay.
But yeah, I could have easily made that an iron condor too. Let's see. Yeah, IWM was recent. And both of them were, I think, within a day of each other. I'm just looking at the trades right now.
Yeah, you had them back to back. Yeah, the IWM, then the QQQ.
Yeah. So IWM 175, 170. You're gonna have to go up near the 200 anyway.
Yeah.
It's not necessarily gonna be worth the risk. We can look. So if you're selling the 200, that's already a high delta.
Okay.
205 or so. You're already at a pretty high delta, 0.14. It brings in a decent amount of premium, but yeah, if you wanted, you could do that. It's not necessarily wrong with it.
Yeah, no, I was just curious on your mentality on it, on when to do them.
One thing you can consider is looking at the Bollinger Bands
Okay.
and see is it near
If
the
they're expanding.
bands or not. Oh, it didn't come up. Why is it?
Lance, do you ever use volume profile on Thinkorswim?
I use it a lot actually. For some reason, I have Thinkorswim at home right now, and I have it on my laptop at school, and it doesn't save the same ones. Like I have all these different sets in my school one, but I guess you have to re-put them in if you have it in two places. So what I do for volume profile is I'll typically look at where there's a large amount of volume. And then if I could sell a put credit spread below that number and get decent premium, it almost acts like a support level.
Okay,
So for IWM right now, you could see this, I always do daily 3 month on these. And
Yeah,
then
and you can see most of the volume is way lower.
182, 185 has pretty big volume there.
so that acts as almost support.
Yeah, and that's why I went 175. I would have liked to go lower because there's a lot of volume in 175 also, but the 170 wasn't paying enough, so I didn't bother. And I'm relatively confident the 185 and 182 could be helpful with that large volume there, because institutions
Okay.
are possibly buying in at those prices, like anytime in the last 3 months. So if it touches those levels, they could essentially dollar cost average in at that price again. And then they're buying at the discounts of the current price, because if it's at 193 and they can load up again at 182, it acts almost like a support level and then it'll bounce up. At least that's my thought
Okay.
process on it.
Yeah, that makes sense.
I just had
Then
that.
I always want to go a little bit below that whenever selling these. Do these levels, of course, Fibonacci levels? Not necessarily. I honestly don't do much with Fibonacci's. I don't necessarily believe in it. I know all these people are like, oh, but it's based on this Italian guy. What are you supposed to do? High and low, something like that? I forgot. It's something with that. No, that's a date one. I've never done that one before. What's the most common Fibonacci, I think, is for pricing? Is it a retracement? I mean,
think that's the one.
yeah, it's like here, right? But look, it happens to be right next to this 182 level is a line right there anyway. So I mean, it might line up. It's almost like correlation and causation, possibly, where you happen to have a large level because of the Fibonacci, and that's because institutions might be buying because of the Fibonacci, and it's like a self-fulfilling prophecy. This is all a hypothesis. I don't know if it necessarily means anything. But I think people do the Fibonacci based on recent high and low, and then they just draw a line to it and then see if it'll keep going in that direction or not. And then I think they also use this for taking profits if they're buying options. So they might buy in here and then get out at this first level or second level. Gotta love the fulfilling prophecies. Other thing I do, overflow plus VWAP. Standard deviation, yeah. I used to use VWAP quite a bit. I don't as much anymore. You do +1, +2, and +3? I usually just looked at the +1, I think. Or it's +2, yeah. I think it just defaults at 2 standard deviations away. And you can see that the price level is pretty much lining right with it on the monthlies at least. I know some people in trading, when they do, scalping every 10, 15 minutes, if it crosses over the VWAP, they might get in at that point, but when we're selling options, I don't know if it's necessarily that useful unless you see the VWAP's very different. Just to be curious, I bet you this VWAP, oh, the VWAP's actually pretty similar for that too. I guess if you look at like the minutes, you can get some crazy stuff. Oh, there's a Bollinger Man then. Any last questions? Got a few more minutes.
So did you do the put credit spreads in like 2021 when it was a good market? I guess that's what I mainly do anymore. I just do
Yeah.
those. I'm just curious if it'll come to an end if the market starts acting normal.
It's hard to know. I mean, a lot of people will say, "Oh, the market's due for a drop." I'm like, we don't know that. Maybe it is. Maybe it's not. We did quite a bit in 2020. Worked out all right. In the beginning of 20, or sorry, did you say 2020 or 2021?
Just whenever, like 2021 probably is more.
Yeah, 2021 in the beginning of the year. I know Roz remembers, like, we were buying and getting out of those super quick, and that was really good. I mean, it was like last month for about 3 to 4 months worth, where we're buying back a 50% profit within like a week. It was awesome. But yeah, that was a big upturn. I wasn't doing put credit spreads during COVID stuff. That would have, I mean, it would have hurt anybody at that point, but you would have been
Yeah.
stopped out quite a bit. And about 2 months or so would have been really rough. But then when the market turned back up again, it would have been good. You just look at the like yearly chart on that. Yeah, like we missed a big drop here, but I remember coaching tennis and I would see like, why is like QQQ down like 5% today? I was like freaking out while I'm trying to coach tennis, but I was like around here, and then huge upswing right after that. So yeah, you would have got hurt right here and then a little bit before it for a short period of time, and then this would have been really good selling put credit spreads.
Yeah.
It pretty much
What's that
started
volume- what's that
around
volume
here
indicator
anyway.
called?
What was that?
What's that volume indicator you have on your screen called, or
So you
volume
click
profile?
on edit studies, and then you just do volume profile.
Okay.
It's a very useful one, and I go 3 months daily whenever I'm doing these alerts. Because I figure that if you could see in the 3-month chart and the daily candles, that if it's a good levels of support and resistance at that point, I mean, you can look further out, but 3 months seems pretty ideal to me when I'm doing these. Because these are, 30, 45 days out usually in the expirations. And you could also do that on TradingView, just type in volume profile. I have those as well.
Yeah, I've been using that a lot more too.
Roz has MNQ long 3 standard deviation negative. And then I guess the goal is for it to bounce back up. Yep. Smart money concepts I've heard of. I tried it out. I didn't particularly like it much, but there's a lot of different ones that show different support and resistance levels on TradingView. And you can just type in supply and demand on TradingView and you usually see a lot of different possibilities there. Any last questions? Got a few minutes left. All right, well, I got a one-on-one with one of the members here, so I'm gonna cut it here. Thanks for stopping by, everybody, and I'll set the recording on YouTube if you wanna rewatch it. And happy trading. Feel free to let me know any messages on Discord, all right?
All right, see you, Lance.
All right, bye, guys. Have a good night.
Thank you.